On June 5th, the American economy added 172,000 jobs, more than double what forecasters expected. The stock market did not cheer. It had its worst day of the year. Good news became bad news, all in one print. Now the calendar takes over. 3 binary tests land in 5 days. Consumer inflation on Wednesday, Oracle's earnings the same morning, and the largest public offering in history on Friday. When money costs more, what is growth, leverage, and a story actually worth? So where's the edge into a week like this? Not in pre-positioning. Let the evidence print first, then act. Not the crowd, not the lever, the evidence. This is the asymmetric, issue 9, the test. Tech and crypto investing for thoughtful retail from an operator's lens. Friday's break flipped the market to pricing a rate hike. This is the Sunday read into the week that decides whether the break was an air pocket or a regime. Here's the one-line read. A broken tape meets its proof week. The break flipped the market to pricing a Federal Reserve hike and broke the most crowded trade. The chips had their worst day since 2020. Now 3 binary tests in 5 days will tell us what growth, leverage, and a story are actually worth. The same discipline labels run throughout. Confidence, high, medium, or low. Consensus versus variant, what the market believes and where we may differ. And on every call, what would change our mind. This is research, not advice. Part 1, the setup, a broken regime into the week that tests it. Where the break left the tape. The S&P fell 2 6/10% Friday, the worst day of the year. The Nasdaq 4 2/10. The 2-year Treasury sits at 4.16%, its highest since early 2025, and the chip index had its worst day since March 2020. Bitcoin held the weekend near 61,500, and the Federal Reserve meets June 17th, a near certain hold. But with a hike now priced by year-end, a cost of money regime change now faces its first hard evidence. Start with rates. Wednesday's consumer inflation report is the swing print. Consensus looks for the core reading up 0.2% on the month, cooler than April, with the headline firmer on energy. The core is the number the Federal Reserve watches. A cool core is the bull's first lifeline since the break. A hot one rearms the hike trade. And behind it waits a hawk. Kevin Warsh chairs his first meeting June 16th and 17th. A hold is nearly certain. So the risk is the tone, not the move. Then the structure of the market. In a single day, the semiconductor complex erased more than $1 trillion, its worst session since March 2020. Nvidia fell 6%, Intel, Micron, and Broadcom fell as much as 13%. A record beat from Broadcom got sold, and the whole group sold with it. The tell this week. Do the chips steady into Wednesday's print, or keep bleeding? That tells you if Friday was an air pocket or a leadership change. Into that break lands the largest public offering in history. SpaceX prices Thursday and trades Friday, about $75 billion raised at a valuation near $1.8 trillion. Fidelity cut the minimum to participate from $500,000 to $2,000, reserving as much as 30% of the deal for retail. A strong debut says the issuance vacuum still has appetite. A weak one says the demand limit is finally found. Gold and oil. Gold and silver sold off with risk on the jobs print as a firmer dollar and higher real yields drained the inflation bid, a sharp breather, not a trend break. The structural reserve crown is intact. Oil sits near $91 to $93, up more than 30% since the late February conflict. The Strait of Hormuz is still disrupted, and now a second choke point, Bab el-Mandeb, is being flagged. An energy spike would feed straight into a firmer inflation print. Put it together, a hawkish curve under a hawkish new chair, a $1 trillion chip break still fresh, the largest offering ever landing Friday, and the one number that adjudicates the regime, consumer inflation, prints Wednesday. The break doesn't say sell everything. It says, don't pre-position into a proof week. Less duration, less leverage, and more cash to deploy on the other side of the prints. Part 2, in focus, the name at the heart of the test, the data, then the debate. The lead is Oracle, and it reports fiscal fourth quarter earnings Wednesday, the same morning as the inflation print. No single name better expresses the regime's question. Can a debt-funded, backlog-driven build-out convert into cash flow as the cost of money rises? The bull case is enormous. An order backlog of $553 billion, up more than 300%, with cloud infrastructure revenue up 84%. The bear case is the balance sheet. Capital spending near $50 billion this year, more than double last year, funded by roughly $43 billion in new senior notes, with free cash flow running about $25 billion negative. Backlog is not cash. Wednesday is a clean, binary test of whether it converts. Bitcoin spent the weekend near 61,500, holding its broken low of 59,000, with a momentum reading among the most oversold on record. The driver is mechanical, a record 13-day streak of exchange-traded fund outflows, about $4.4 billion, as the marginal risk dollar rotated into artificial intelligence and the SpaceX offering. The structural thesis is intact. The setup is capitulatory. Below every broken support, a reclaim of 63,000 would mark a change of character. The catalysts come first. And the thematic read: the issuance calendar is now a macro variable. SpaceX's offering, Anthropic's draft filing, Alphabet's $85 billion raise. When megadeals pull cash out of the secondary market to fund the primary, the drain shows up as price. Friday's tech selling was partly desks raising cash for the deal. Friday's debut is the year's single cleanest demand test. Part 3, the test signal, how to read a week of 3 binary catalysts. Consumer inflation is the master switch. Read the core, not the energy-driven headline. Oracle is the artificial intelligence trade's cash flow test. Backlog is not cash. SpaceX is the issuance trade's demand test. And a hawk waits 1 week out, capping any relief rally. The edge stays in optionality. What we are watching, the proof week. Consumer inflation on June 10th, the master switch. Oracle's earnings the same day. Producer prices and the European Central Bank the 11th. The SpaceX debut on the 12th. The Federal Reserve and Warsh's first press conference on the 16th and 17th. Plus whether the chips stabilize and whether Bitcoin holds its new low zone. And we keep score in public. Oracle, watch the print. Strategy, avoid the lever, own the asset. Bitcoin, capitulation tape, entry sensitive. Broadcom and Alphabet, quality core, patient on entry. Gold, constructive. Cigna and EQT, still attractive. Each is a dated, falsifiable call, and we grade them. So where does it land? 3 takeaways. Consumer inflation adjudicates the regime, read the core. Oracle is the artificial intelligence trade's cash flow test. Backlog is not cash. And SpaceX is the issuance trade's demand test. Late cycle and freshly broken, the edge this week is not a position, it is optionality and the dry powder to act after the evidence prints. That's the test. The asymmetric turns filings, flows, and market data into one disciplined read for investors who want the evidence, not the noise. This is research, not personalized advice. Verify it yourself. We'll see you in the next issue.